All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We have some business to attend to here with Disney. It is trading here just below about 50 cents below its stop level. So need to go and exit that position here. And yeah, so going to do that here. Let's see. Maybe. There we go. All right, so create close. $1.52, $1.53 is about what it's at here. I'm getting a little lag here on my broker account. So I'm just going to do a market order, confirm, and send that. I hate doing it. Really do. But yeah, that's the rules of the game here. So I'm out of Disney at 151. So 151 is my exit price here. And let me just make sure the alert goes out. Make sure I get the thumbs up on that. Okay. All right. So Disney is out and done here. 916. I'll fill that in and we'll be good to go. And that leaves the challenge here with all cash. Challenge just over 10,000, just over 7,000 in gains here. There are no new signals on the board right now, so nothing to go get into. I thought Disney had a chance to trigger bearish here, but the consolidation risk component has flipped a little bit here with it, and one that could easily turn bullish if we see a gap up tomorrow. So we'll kind of see how that plays out. But we've seen oil continue to, continue to get bought up here today. And, that has continued to put pressure on some of these areas that, let's face it, they don't do as well with oil. Higher. Valero has kind of snapped back a little bit as we're seeing the crack spread, alter a little bit. But, when it comes to some of the airlines, when it comes to some of the travels, most of them are near their lows or at their lows on the day here right now. And we could see some further selling to come if there is some more, buy up here with oil. I'll show you the oil futures chart here if I can get rid of this lag on the broker. Here we go. But you can see that last night oil gapped up, right? When the futures market opened, oil jumped and then traded near the low end of its range most of the night. It was still up pretty big. But since the U.S. equities markets have opened here today, oil's gone from 60 up to 63, which in and of itself is a massive move, right? It is a huge move on its own, without, the context of the jump that we saw last night. So big move, big move here for oil today. If we go look at some of the oil stocks and how they've traded today, you take a look at something like a Chevron, early on sold off, but is started to climb on back a little bit. Exxon, same thing. But not a lot of these energy names are at or, at their highs. Some of the more heavily shorted ones, like a Halliburton, absolutely near their highs of the day. The shorts have been clobbered out of Halliburton. It's also one where the price of oil surging. You could argue it's a big positive for names like Halliburton, some of the oil services space. So we do see some more, improvement there. But when you look at the kind of the trash of the oil industry, like Noble, NE, this is just they poor guys. They couldn't even get a short squeeze here on them today, and so down they go. Rig was able to get some short squeeze in it here today, and is sitting up near its highs. But both Halliburton, Rig, they need oil about another $10 higher from here to really start to be game changing for their companies. And I'm sure investors are going to start tossing around this break-even point for energy companies, right? Energy companies, they have this break-even point for oil where, at a certain price, the company is break-even. Below that price, they're losing money, and above that price, they're making money. And I suspect that we'll start hearing a lot of that in some of the news and in some of the banter that's out there, here in the coming weeks. And we'll certainly create some movement. One of the lower cost producers is Chevron, right? But you have some refining and other elements here to the company. Ultimately, I think Valero will benefit strongly from this, and I know that doesn't make much sense with oil prices higher, but one thing we see historically is Valero's able to shrug off higher oil prices because after an oil price surge, we tend to see a gas price surge. It's just not quite that time of year for that to happen. So anyway, that's the big news element today. We do have the TLT moving on up, so it's pushing banks slightly lower. Tech is pretty mixed here. We see things like Adobe down Amazon down pretty good, while Twitter is up just slightly. Netflix slightly in the green, while Microsoft is red. So we see the normal kind of differentiation that we have seen in the markets of late, even today with some of that uptick. Now, in the title of this video, I put, "Does news drive the market?" And this is a topic we've talked about in the past, and it is a topic that I know many have very different opinions on. But one thing that I need to or want to kind of clarify here is that when it comes to driving the markets and what drives the market, time frame really goes a long way into understanding what the drivers are, right? If we're looking at a minute chart and we're looking at some of the oscillations that happen minute by minute, no, news is not driving it. We're not getting a new piece of news each and every minute, driving the minute chart. If we back it out to a 10-minute chart, yeah, maybe. We back it out to a daily, yeah, maybe, right? There are news events in the market, and there always will be, there always have been, and they will drive change in the market, right? If we had a piece of news here today that sent oil down 10%, Disney would be up $3, $4, right? We have a news event that's driving oil up 10%, so it's moving Disney on down. This is a direct news element that is affecting the stock here on the day and affecting it in a way that the technicals were not reading here prior to the event. And when I look at news events and news events driving things, normally I'm looking at, okay, where are news events doing something different than what the overall trend or tendency of the stock, has been of late. We can see big gaps in the stock, and those are certainly news events that happen, but most of those are individual for the stock. The bottom line when it comes down to it, from a trade perspective, from a challenge perspective, okay, from that mentality and perspective, the news does drive moves in individual stocks and in the market. It doesn't drive massive market moves. It can drive massive stock moves. Meaning the market is not going to rally 20% in one day because of a piece of news or drop 20% in one day because of a piece of news. It could happen. It's happened once in the past. But the rarity of that is very high. An individual stock, they have earnings every three months, right? They have other events and other things that happen that can drive it, right? So news will create more oscillation in stocks themselves on a percentage basis than on the markets themselves. But if we back markets out and we take a look at something like the S&P 500, and we look at it from a long-term perspective. And here I'm just going to throw a monthly chart on here. Okay. Big ups, big downs happening here in the market. We get high news periods, right? We get the U.S. elections and all of that, through here. We get European debt crisis here, 2011. We get, flash crash right here in 2010. We get here in 2018 the Fed scare and trade, trade war type stuff. But are those really driving the trend of the market? No, they're not. They're absolutely not driving the trend of the market. They are driving these oscillation periods, these chop periods. They're driving the uncertainty. They're creating pullbacks. They're creating big drops, big pops, those types of things. But what really drives the markets over the course of the long term, right, comes down to three things. Number one is the GDP, or economic growth. Now, I just have a chart here of the GDP here in the U.S., and this is U.S. GDP over the last, 50 years? And here on my squiggly black line, this is zero. So above zero, we have economic growth on a year-over-year basis. You'll notice that we get into contraction periods where the economy contracts a little bit. Those periods happen, but they're much rarer than the periods of economic growth. And while the economic growth today is significantly less than the growth in the 50s and the 60s, we continue to see economic growth. That's one of the reasons why we see markets near all-time highs, right? The economic growth helps to drive the markets. Another factor that drives markets is inflation, right? $2 today isn't necessarily worth $1 20 years ago, right? You could have bought more with a single dollar 20 years ago than you could buy with $2 today. We have this inflationary effect that comes with economic growth. Now, that's not a negative. It's not necessarily a big positive, but it's a reality of the situation. And so when we see inflation of 2% year after year after year, you think about the markets, they kind of just have to go up based on some of that inflation. And we see that happen all the time. Now, does it move right along with inflation? No, it doesn't. Inflation's a small piece of it. GDP, inflation, they help to drive the market, major market trends. These are things that will push markets from, for up 30%, 40%. Not news. A single piece of news and how does Russia respond tomorrow isn't going to, drive that type of move. The economics, inflation can. But perhaps the biggest driver of the markets that we see year after year after year comes down to corporate profits. And you take a look at what's happening to corporate profits here since the early 70s. They've gone parabolic. They've absolutely gone parabolic. Companies are just making more money. Now, is there more money in the system? Yeah, so there's more money to be made, right? And so you say, well, if the Fed adds more money to the system, then companies are going to make more money, corporate profits are going to go up, stocks are going to go up, and that's what we continue to see. But as long as corporate profits continue to go up, we're going to see the stocks continue to go up, right? The news elements of the news scares and who's in the different political areas and, what happens between two different countries and a trade war and all that. As long as corporate profits continue to rise, the markets are going to continue to rise. These are the big drivers, right? These are the macro factors. These are the factors that if you're looking from an investment standpoint at the market, you have to have a grip, you have to have understanding of. Right? When inflation is lower, you have to kind of expect maybe some of the market moves will be tempered. When inflation's higher, market moves could be a lot greater. When corporate profit growth is higher, well, then we are going to see stocks move significantly higher, right? And one of the things that we have seen is corporate profits go from a recession in 2015, 2016 into a significant growth period. And that is, that's what we have seen transpire over the last, 2.5 years. These are the factors that drive the long-term trends, the long-term market. When we see big pullbacks in the markets, it's because we see big pullbacks in corporate earnings. 2007, 2001, we saw big pullbacks in the corporate earnings. When you go to, the crash in 1980, 87, right? We have a big pullback in corporate profits that happened during that time. Corporate profits, you could argue, is the best indicator as the overall trend of the market. And it's one of the reasons why earnings season is always so important. And so as a trader, right, there's this kind of balance between, well, okay, corporate profits, they're doing this, inflation's doing this, the economy's doing this, and we know it could all change, every once in a while. But the news, normally, we're not talking about it changing it very much, right? I mean, even we've had the U.S.-China trade war. It hasn't changed corporate profits to a great dramatic degree. And then from a trader standpoint, how do you balance that with some of the day-to-day oscillation that's news-driven, right? Well, it's one that will drive traders nuts, right? It'll drive traders nuts. They can go get into a good position, a piece of news comes out, boom, right? It damages that position for a day or two. And you go, well, if I hold it for a month, it'll be good. And if you're in an option, right, the month will just kind of kill most of the option. But if you get hit with a piece of news, you're away, great, it works out nicely. And the bottom line is, yes, news is a reality, news is a factor. And a lot of times we will actually see the news go with some of the technicals in the stock. But that doesn't always happen, right? That just simply doesn't always happen. You go take a look at a Valero here today, right? And you're going to have two arguments. Well, buy high, sell higher, right? Just ride the trend. As long as it's closing at new highs, ride it, go, go, go. And then, we see a day like this. It's like, well, that was overbought. You should have sold before it dropped because you knew it was overbought. Well, it was overbought right down here, right? So, you got both of those sides. And so to make dramatic conclusions simply based off news, I think is, pretty short-sighted and something that will, something that leads to a lot of aggravation and a lot of wish-washy because you can always tell yourself both sides of the coin. But it's a reality, and it's a reality that traders face. It's a reality that traders deal with. Now, as far as the challenge in dealing with it, well, you know what? You'll notice there's nothing in here to say, well, news, blah, 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 right? It's one of those where Jeff can step in under unusual circumstances and change a trade, right? Was Disney an unusual circumstance? Not really. Not really. We've seen news, come and go. Yes, it's a historic jump in the price of oil. Okay, I'll grant you that one. But okay, just running it with the process, and we'll continue to do that. And for unusual circumstances to be, we have to be seeing something we don't normally see, or something that is so blatantly obvious in real time that it's, okay, right? For example, Valero right back here, jumping out of Valero right here. I mean, it was so blatantly obvious at the time, and I jumped on video, showed why, I can't hold the calls, right? So, yeah, I did something a little bit different. But, it is one where the news will continue to exist. It's one where, I suspect what we saw here this weekend only increases and heightens the news risk for the market over the next week, 2 weeks. And one where we could see some more big oscillations in the market, come in over the course of the next week or two, just based on the news that we saw this weekend. Okay. Alrighty. Thanks for hopping on. Any questions, please let me know, and we'll talk to you later. Take care.